Welcome to Financial Insights in Minutes, where we summarize the best cryptocurrency discussions to save you time. Today, we're diving into expert analyses about Bitcoin's market trajectory and the impending altcoin season.
Should you be worried about the looming debt crisis affecting your investments? We'll uncover the latest trends and predictions that matter.
We have some fascinating views lined up from leading voices in crypto. Let's see what insights they offer.
So get ready for a financial analysis that could shape your investment strategies.
Let's start with our first review. First, Altcoin Daily discusses when we can expect the next altcoin season to ignite. Next, Lark Davis analyzes the mixed signals from the crypto markets and potential recovery patterns. CryptosRUs dives deep into the recent Bitcoin dip and its surprising causes linked to government actions. Crypto Banter presents bold predictions on how recent events could lead to another bull run in crypto due to massive money printing. Benjamin Cowan highlights the critical relationship between Bitcoin and the US dollar index, revealing key market insights. Coin Bureau sheds light on the looming global debt crisis, exploring its implications for economic stability and the crypto markets. BitBoy celebrates XRP's legal victory and its potential for a major market rally, contrasting it with ADA's trajectory. Finally, Ivan on Tech discusses Tether's recent activities and what that means for Bitcoin's future. Welcome back to Altcoin Daily. Today, we're diving into a hot topic. When will that much-anticipated altcoin season finally kick off?
There's a lot brewing in the crypto space. With Bitcoin predicted to reach new heights, there's plenty to analyze regarding the ripple effect on altcoins.
What's the central thesis of this discussion?
The core idea is that as Bitcoin approaches $70,000 and Ethereum reclaims $4,000, we'll see a significant influx of capital into altcoins, igniting their value.
Let's unpack those key points, starting with Bitcoin.
Currently, 45% of Bitcoin hasn't moved in 6 months. This typically indicates consolidation before a big move.
And what about companies like MicroStrategy?
Metaplan has made headlines again, buying $500 million in Bitcoin, which is a huge vote of confidence.
Institutional interest is rising, right?
Yes, Goldman Sachs is heavily involved with Bitcoin ETFs, signaling more institutional investments coming.
What predictions can we draw from this?
Experts believe that once Bitcoin surpasses 70,000, altcoins are set to explode in value.
How might Solana factor into all of this?
A new Solana ETF could spark excitement among investors, pushing prices higher and driving interest.
To wrap things up, what's the big takeaway?
The bottom line is, if Bitcoin reaches 70,000 and Ethereum hits 4,000, it will catalyze a major altcoin season.
Any final thoughts for our viewers?
Absolutely. Stay sharp and track these developments closely, as the market can shift rapidly. What do you think will happen next? Comment below.
Welcome to Lark Davis's channel. Today's hot topic: what's the current state of the crypto market? Spoiler, it's been a wild ride.
Definitely. It's a mixed bag out there, with Bitcoin lagging while equities thrive. Let's unpack what's happening.
So what's the central thesis here? Are the crypto markets really in trouble?
The core message is that while the crypto markets are struggling now, they typically follow a pattern of recovery following Bitcoin's halving events.
What's the mood in the markets right now? Any insights?
The sentiment is quite polarized. Some think we're heading for doom, while others believe this is just a standard market correction.
What about those economic indicators we've seen?
Recent jobless claims are lower and producer prices are down, suggesting a robust labor market, which is good for investor confidence.
Any predictions for Bitcoin's trajectory in the coming months?
Many analysts believe Bitcoin will rebound, aiming for prices around $72,000 to $100,000 as we approach the next halving.
What are the key predictions regarding market recovery?
There's a consensus that we might witness robust market activity in Q4 and Q1, as recovery typically occurs post-halving.
And what about investor behavior as we move forward?
Gravitating towards established cryptocurrencies might help, especially if institutional interest ramps up, easing previous sales pressure.
To wrap it up, what's the final takeaway for viewers?
Despite current challenges, there's reason to remain optimistic, as historically, crypto markets rebound after downturns, especially following halving events.
What do you think about these predictions? Are you buying, holding, or selling? We want to hear from you.
Drop your thoughts in the comments below. Let's discuss how you're navigating this roller coaster market.
Welcome back to CryptosRUs. Today's topic: what caused the recent dip in Bitcoin's price? The cryptocurrency fluctuated from around $60,000 down to near $56,000, but has since bounced back up slightly.
Right. George Tung dives into the nuances of Bitcoin's volatility and the implications of government actions on its market. With his extensive experience, he's here to shed light on what's really happening beneath the waves.
What's the main message we need to get from this video?
The essential thesis here is that the drop in Bitcoin's price appears to stem from the US government's actions, possibly liquidating some of its Bitcoin holdings, which was unexpected despite favorable conditions in the broader market.
Let's unpack the details. What led to this dramatic movement?
One significant factor is the US government moving roughly 10,000 Bitcoin to Coinbase, indicating possible sales. The total holdings of the government are around $12 billion, so this raises eyebrows.
And how does this align with the broader market?
Interestingly, it's a bit of a puzzle. While stock indices like NASDAQ saw gains, Bitcoin still dropped. It's a classic case of the crypto market being influenced by factors that traditional markets aren't impacted by as directly.
What historical context plays into all this?
This year marks 53 years since the US abandoned the gold standard. This context highlights why Bitcoin arose in the first place: distrust in fiat currency and inflation's detrimental effects.
So how does inflation relate to Bitcoin?
Great question. As traditional assets inflate, Bitcoin is proving itself as a reliable store of value that outpaces inflation, making it an appealing option for those worried about losing purchasing power.
And what about the current investment climate?
There are positive signs there too. For instance, we saw a launch from MicroStrategy facilitating ETF access. Major players like Goldman Sachs and Morgan Stanley are adopting Bitcoin strategies, indicating institutional support, which is crucial.
What predictions does George provide for Bitcoin's future?
He forecasts that Bitcoin could reach new highs by the end of the year. With central banks looking to inject more liquidity into the market by cutting interest rates, Bitcoin stands to benefit significantly.
What's the long-term outlook?
The overall sentiment is that smart money is accumulating Bitcoin despite the current volatility, signaling a strong belief in Bitcoin's future. As that becomes clearer, market sentiment is likely to become more bullish.
To wrap it up, what are the key takeaways from George's discussion?
Understanding the influence of government actions is crucial. Bitcoin offers a shield against inflation and market uncertainty. Holding strong and staying informed is essential for every investor.
What final thoughts can you share?
Engagement with the crypto community and staying on top of news can make a big difference. Drop your thoughts in the comments. What do you think about Bitcoin's movement?
Welcome to Crypto Banter. Today, we're steering right into some thrilling waters, discussing whether monkeypox could lead to another buying spree in cryptocurrencies as we navigate through unusual pandemic news.
Exactly. And who better to guide us through than the savvy Ran Neuner, known for his insights in crypto trends. Buckle up, it's sure to be an intriguing ride.
So what's the core thesis we should focus on today?
The main idea is that the WHO's declaration regarding monkeypox could result in massive money printing like we saw with COVID-19, which historically triggered a significant bull run in crypto assets.
Let's break down the history. How did the last pandemic shape our markets?
Last time the WHO declared a pandemic, it sparked unprecedented money printing and led to the biggest bull run in crypto history. Sounds eerily familiar, right?
And what's the current market's pulse following these announcements?
The market is incredibly sensitive. It saw a downturn even with favorable CPI data because the US government moved Bitcoin, causing panic among traders.
Now, let's dive into monkeypox. What does it imply for markets ahead?
As lockdown fears rise, it's suspicious how it aligns with upcoming elections. Many believe it could be a strategic ploy, echoing past strategies to influence voter behaviors.
What's the scoop on prediction markets? How do they compare to meme coins?
Prediction markets offer a refreshing change. They give traders a chance to bet on varied outcomes, leveraging attention and allowing for systematic betting, way more engaging than meme coins at this point.
What rattling predictions does Rand share about crypto volatility?
He anticipates high volatility in crypto. With potential government actions looming, Traders need to stay ahead of the curve to manage the turbulence.
And regarding fiscal policies, what can we expect?
The prediction hints at increased money printing. If enacted, it could fuel a significant inflow into crypto as investors seek safe havens.
So, what are the final thoughts as we sail out of today's discussion?
It's vital for all crypto investors to keep a close watch on the developments surrounding monkeypox. Each twist and turn could unveil potential opportunities in the market.
Before we go, how should viewers react to the potential for more lockdowns?
Great point. Viewers should share their thoughts. Would they comply with future lockdowns? Drop your comments below. Let's keep the conversation rolling.
Ahoy, crypto enthusiasts! Welcome back to the channel. Today's voyage dives into the fascinating relationship between Bitcoin and the US dollar index, also known as the DXY. Don't forget to hit that subscribe button and give us a thumbs up.
That's right. We're unraveling how these two powerhouses interact in the market. Benjamin Cowan, a well-endowed crypto analyst, is at the helm today, guiding us through this intricate dance.
So what's the big idea behind this Bitcoin and DXY thing?
The main thesis highlights that Bitcoin and the dollar often move in opposite directions. If one rises, the other typically falls. Understanding this relationship could provide significant market insights.
Let's break down the correlation. What do the numbers show?
Currently, Bitcoin and the DXY have a correlation coefficient of 0.24 over the last 60 days. However, recently, their movements have been more closely tied over the past 30 days.
What can we learn from 2016?
In 2016, the DXY rose by around 10% between August and December. This current cycle mirrors that pattern, making it essential to watch how these scenarios unfold this time around.
Okay, so if the dollar goes up, what happens to Bitcoin?
If the DXY increases, we might see Bitcoin's value dip. This could create a pivotal moment for altcoins, depending on how the market reacts.
What are the predictions moving forward?
If the DXY reverses its current trend, Bitcoin might respond with significant growth, possibly hitting new highs. It's a thrilling speculation.
And what about altcoins?
If the DXY fluctuates, we could see altcoins outpacing Bitcoin. The interaction between the DXY and Bitcoin will ultimately impact altcoin season expectations.
To wrap things up, what should viewers take away from this?
Understanding the inverse relationship between Bitcoin and the DXY can significantly inform investment strategies. It's crucial to keep tabs on these developments.
Any last thoughts before we set sail?
Yes, viewers should closely monitor the DXY for potential moves. What do you think will happen next? Share your thoughts in the comments.
Welcome to Coin Bureau on YouTube. Today, we're diving deep into the growing government debt crisis that's gripping countries around the world.
Indeed, the video outlines how global debt has skyrocketed past a staggering $315 trillion. We'll explore which nations are struggling the most.
So what's the crux of this video? Why should we be worried about rising global debt?
The core thesis is clear. Countries are drowning in debt, and it's significantly impacting economic stability worldwide. A crisis is brewing.
Let's break down those staggering numbers. How much has global debt really grown?
Incredible, right? It jumped from $226 trillion to $315 trillion in just over 2 years. That's an increase of nearly $100 trillion.
What exactly makes up this debt?
National debt is composed of corporate debt, household debt, and primarily government debt, which drives national financial stress.
Which countries are the top contenders in this debt race?
Japan tops the list at $4.5 trillion, the US following strapped at $35 trillion. Quite a financial tug of war.
What does this mean for countries' economic health? How's it measured?
Countries with a debt-to-GDP ratio over 100% are in critical territory. Japan leads with a staggering 258%. Yikes!
And what do experts foresee in light of this growing debt?
Predictions aren't great. Economies risk destabilization, and potential defaults could make for tough sailing ahead.
Is there any silver lining in this cloudy financial forecast?
There is a glimmer of hope. Emerging technologies like AI and quantum computing might just be our lifelines out of this debt mess.
To wrap it up, what's the overall takeaway from today's discussion?
The global debt crisis is a ticking time bomb. We all need to stay informed and vigilant about these economic trends.
How can viewers engage with this content?
Drop your thoughts on your nation's debt. Are you worried? Let's start a conversation in the comments.
Welcome back to BitBoy on YouTube. Today's hot topic, XRP's massive legal win against the SEC. Joined by none other than Brad Garlinghouse, the boss of Ripple Labs, this is a must-watch.
Absolutely. We'll dive into why XRP is charting its own course, unlike ADA, and how recent legal victories might just set it up for a major moonshot.
Let's start with the core thesis. What's the main takeaway from this legal battle?
XRP is breaking free from SEC scrutiny with a landmark ruling confirming it's not a security, paving the way for Ripple to thrive in the growing crypto ecosystem.
Let's navigate those key points. What about this recent legal victory?
The SEC reduced its penalty demand significantly, now just $125 million. This is huge news that indicates the SEC might have overreached.
What's the market impact of this win?
Brad suggests that XRP could hit between $8 to $10, especially if Ripple goes public and launches an ETF.
And what about Ripple's future plans?
Ripple is pushing hard for clearer regulations while they continue to innovate and expand within the crypto space.
So, what are the predictions moving forward?
There's a strong potential for XRP to enter a bull run, particularly as more investors jump in following positive legal outcomes.
And what about the impact on ADA?
XRP's rise could leave the ADA community feeling the squeeze. Ripple's success may overshadow their achievements.
Wrapping it up, what are the key takeaways for our viewers?
The victory for XRP signals a beacon of hope for clarity in crypto regulations. It's time for viewers to consider their investment options carefully.
Any final thoughts on Ripple's journey?
Absolutely. While the path seems bright, viewers should remember to tread carefully, watch for market movements, and share their thoughts below.
So where do you think XRP is heading next?
Drop a comment with your predictions. We love hearing from you.
Welcome back to another exciting episode. Today, we're diving into a hot topic, how Tether printing is shaking up the Bitcoin markets. Let's explore what's behind these movements.
Absolutely. Tether's recent surge in printing has significant implications for the ongoing bullish sentiment in the crypto space. Buckle up, everyone.
So what's the crux of today's discussion? Why does Tether hold such a pivotal role?
The core thesis is that Tether printing is a strong indicator that the Bitcoin bull market remains intact. This trend has historically correlated with price increases in Bitcoin.
Let's dive right into key points. What can you tell us about Tether's connection to market sentiment?
The latest printing of $1 billion from Tether indicates strong investor sentiment and is often associated with rising Bitcoin prices.
What do the projections look like for Bitcoin? Any specific predictions?
Arthur Hayes forecasts Bitcoin could hit $100,000 by year-end, echoing past trends that have seen major increases during Q4.
And what's happening with institutional interest?
Major players like Goldman Sachs are diving into crypto, holding around $500 million in Bitcoin, which only adds to market confidence.
What's the upcoming prediction for Bitcoin's price?
There's a strong expectation that Bitcoin could surpass $70,000 very soon, driven by current market dynamics.
How could the political landscape impact crypto?
The upcoming U.S. elections could dramatically shift Bitcoin policies. A favorable political environment might just boost crypto adoption even further.
So, what are the final takeaways from today?
The overall message we're getting is that Tether's printing not only indicates, but fuels a bullish market for Bitcoin, with substantial price movements likely in the foreseeable future.
What should viewers keep an eye on moving forward?
We'd love to hear your thoughts. How do you foresee the Bitcoin market evolving? Drop your predictions in the comments.
In summary, the discussion revealed key insights and divergent views among our guests.
Altcoin Daily emphasizes the pivotal moment for altcoins once Bitcoin surpasses 70,000.
Lark Davis presents the notion that while the current market shows weakness, a recovery is likely after the next Bitcoin halving.
On the other hand, CryptosRUs discusses the unforeseen impact of government actions on Bitcoin's fluctuation.
Ivan on Tech's exploration into Tether's printing suggests substantial bullish sentiment for Bitcoin's near future.
Ultimately, Coin Bureau emphasizes the importance of being informed about the growing debt crisis.
Thanks for watching Financial Insights in Minutes for August 16th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see summarized, drop a comment below. See you next time.